So, I mean, what garbage. And of course they're going to go there because gold is invisible and private and it runs no counterparty risk. So you hold it, you own it outright, and you can move an awful lot of wealth in a little teeny package.
Right.
Digital, well, you can transfer a whole lot of wealth almost invisibly, like inflation did on the currency. Once we're all digital, they have full control. They can eliminate its value and hit your principal just like that. And there's not anything, if that's where all your wealth is held, there's nothing you can do about it.
Yeah.
And that is how they reset everything, except that they don't change behavior. They just change the way they account for all of this behavior and call it good. And they've done the same thing, George, with derivatives, right? We know derivatives caused the 1998, we almost had, that was long-term capital management. And by a hair's breadth, the world was prevented from seeing the crash in the derivative market that almost took the whole world down. That happened again then in 2008. But if you look at the number of derivatives, there are so many more now, except what they did was they came out with compression and netting. So they offset this derivative over here to that derivative over there, and then that cancels each other out.
Right.
And it's still higher than it was in 2008. And now it is completely integrated throughout the stock market, throughout the ETFs. And hey, they have programs showing people how to do these derivatives. But those derivatives have nothing, they're just a bet. There's nothing substantial underneath them. So, you know, I mean, this next derivative, because that's what I think is going to tip us. It could very well be the interest rate derivatives, because that's most of the market anyway.
Yeah, yeah.
But I don't, when that piece explodes with their balance sheets and the government balance sheets where they are, I mean, how much confidence do you think the public is really going to have in them this next big crisis? Well, for one thing, that is monetary. That is monetary. Gold and silver are both monetary at their base. So if we're having a crisis with the money, which we are, then you want money that holds its value. And it doesn't hold its value because I say it holds its value. It holds its value because it has the most functionality of any asset that's out there, period. And I say that because I don't know why people don't talk about this more, but it's used across the entire economic spectrum. So it's used in manufacturing, it's used in the monetary system, it's used in art, it's used in food, it's used in medicine, every single aspect of the global economy, which means that it has the broadest base of buyer. So when you were talking about market demand and all of that before, it has the broadest base of demand.
Yeah.
Tell me one other asset or instrument that does that. Because I can't figure out one of them. So that's why it's the true flight to safety asset. And that's why global central banks have been accumulating it like crazy, because as the rest of the system implodes, you know, then there is a true flight to safety. But my concern really, like my concern never has been whether or not the stock market's going to go up or it's going to crash. Ultimately, it will crash. But right now, while they still have, people still have confidence in those dollars.
Yeah.
And they are expanding the programs to get the naive public involved in their fiat game. You know, I mean, that's a big one. That is something that happens before every single stock market crisis, is that the buyers brought it out and go from the people at the top that know what's going on and they're doing all of this trading. The more you have the public participating, and especially in the way that they're participating, you know, once they get the naive public fully involved and they have that digital dollar ready. I think the only reason why we have not yet made the transition is because in this country, I mean, China's already running tests. And I think it's interesting the way they're running the tests, which is by giving people digital yuan. Okay, here you go. Go spend it, right? And so that's the way they're going to do it. That's why they set up the Fed Now accounts, last October, when they were running the tests for the 80 trillion in derivatives, which failed. And we know that it failed not because they let it be visible to us, but because they postponed that interest rate LIBOR transition on most of it for 2 years, 2023. But 2023 is also the year that the Fed anticipates having the digital dollar ready. So why did they set up all these Fed Now accounts and make these huge announcements for something that they're not going to be ready with for 2 years? I mean, why? I can't really figure that one out. Can you? I'll tell you some of the things that I've been thinking about as I've been working on this one piece, especially.
Yeah.
And if you remember, when the Fed first came into play, 1913, they allowed gold and the new Federal Reserve note to run simultaneously and be interchangeable, right? So that people didn't realize that anything had changed, when in reality, everything had changed. Yeah. And the real value of that $20 gold coin, because of all the new money that they printed. Remember, first it was 1-to-1. Then when the Fed came in, it was 2.4-to-1. Okay. And then as this whole evolution occurred, well, it was much different, and it got broader. But I think what's also happening, and I think part of what's happened with cryptocurrencies and bringing in the digital currencies, right?
Yeah.
And cash. They know that if they immediately ban cash, that it's going to be obvious to the public that something has changed. They want you to volunteer it. So if you look at the Fed's or the Bank for International Settlements money flower, you can see where they will allow all of these things to kind of run simultaneously. Now, that's just all fact. Everybody can find it. My opinion is for a while. Then, once everybody is fully integrated and comfortable with the system, that's when they take away the cash.
Right.
Right? So initially, the new cash will have that chip, so that when they go negative, so will that cash that you've taken out of the bank.